Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Dr. Yang, thank you for coming on today.
Happy to be here.
So we have some positive news on the U.S. China trade war, both sides saying that as part of the Phase 1 deal, they're looking at getting rid of some of the tariffs. How are the markets doing today with regard to that news and otherwise?
Okay, well, ever since both U.S. and China said that the negotiations are going well, the global markets have rallied. Now, the most important element in the global rally seems to be that the U.S. and China are successfully working things out. But in the case of the United States, their economic news has actually been very good. Their job creation numbers were more than twice as high as most analysts had predicted. And so the S&P index hit historical highs earlier this week. And in Europe, while the outlook is still gloomy, some figures came out, again, somewhat better than what analysts expected, even though it wasn't a great big surprise. They're taking any good news that they can get, so those are the reasons why the European and American markets have rallied. Asian markets have done fairly well as well, and that's probably because they just announced the agreement on the RCEP, the mega FTA project.
Right. Well, the Korea Development Institute has studied the U.S. China trade war and estimated that if they were to implement all the tariffs they've announced, it would hit Korea's GDP growth by 1/3%. What do you think about that? And if true, what can Korea do about it?
Okay, well, luckily, as we just mentioned, the U.S. and China does seem to be coming to an agreement on the so-called Phase 1 agreement. Phase 1 agreement. Now, the problem with that, though, is that even though both U.S. and China are playing up this deal, it's actually what we called a few months ago a small deal, which means that the fundamental issues of industrial policy, subsidies will probably not be dealt with that much. What will be dealt in this particular agreement would be things like, on the U.S. side, cutting tariffs and perhaps delaying some of the additional tariffs that are scheduled to go in December. And then on the China side, they would agree to buy more agricultural products from the United States. They would agree to some loosening of limits on American firms working in China, and some additional, probably not major, but still some strengthening of the IPR, intellectual property protections. So in a sense, it's not going to be a really great big deal, so perhaps the market is overreacting to the news, but it's good news nevertheless, and that means that from Korea's side, that 0.38% decline that KDI was worried about will probably not take place, at least not in that level. And given that Korea's growth rate right now is only going to be about 2%, even that 0.3% will be a big deal for Korea's growth rates. But what can Korea do about it? We can't really do anything about the global markets, but we can do something about the domestic market. Now, Korea, compared to other advanced countries, our proportion of exports and GDP is very high. It's somewhere between, depending on the year, 43% to 48%. The only other advanced country which has that higher proportion of exports in the GDP is Germany. And even in Germany, a lot of what they export is actually to other European Union countries, so it's within the same economic zone. So Korea is really, compared to other advanced countries, our share of exports is really very high. And so we need to perhaps expand the share of domestic demand in our total demand. And at least on the domestic side, we have some control over the domestic demand by using policies like fiscal, government expenditure policies, and monetary policies. So that's what I think we should really be focused on. We can't do much about the global economy. I know that the government is trying to put some more money into export promotion, trying to get more, make it easier for exporters. But I think our real focus should be on domestic demand.
Got it. Well, staying with trade, according to the Bank of Korea in September, the country posted a current account surplus, smaller though than a year earlier. What do you see in this figure?
Okay, well, the press is treating the current account news as good news because we have a current account surplus. Which is about $7.5 billion, and it's been the highest in 11 months, so though it is lower than the figure that we had in last September. However, if you look more closely at the numbers, they're not very healthy. Not only did our exports fell, but also our imports have fallen as well, and that's usually not good news because that means our domestic demand is very weak. And again, because our domestic demand is very weak, we can't really look forward to a recovery. Part of that reduction in imports are due to lower oil prices, and that's good for Korea. But also part of that lowered imports come from the fact that Koreans are just not buying. They're not buying Korean goods or they're not buying imported goods. So this seems to indicate that the slowdown of the Korean economy will be with us for a while.
Very interesting discussion. All right, Dr. Young, we'll have to leave it there for today. Thanks for your insights.
Thank you.